Boom, people, welcome back to the show. Today, we've got a special interview with Chase Kelly and Eric Slott. They're the founder of Converge Capital Partners. Have done very well. They're actually, in this interview, you'll hear their startup story, how they started with syndications, how they got them started and going inside in Southern Utah, of all places. Got a few real estate deals going and how they raised money from their first investors and have grown since then. They are in the process right now. These guys are by no means on top of the mountain of $1 billion fund. These guys are in the thick of it right now, raising capital, building their fund. So you'll be able to hear their story, and I think you guys will really enjoy. Boom, people, welcome back to the show. Today, we've got two guests with us, Eric and Chase with Converge Capital Partners. You guys have just heard their intro and bio. Impressive what these guys have done. Also in our mastermind program. So we've known each other for a little bit now. We've actually met and all stuff. And I wanted to bring them on the show today to have them share their story with you guys. So welcome on, Eric and Chase. How you guys doing today?
Doing really good. Thank you.
Yeah. How about you? Doing pretty well?
Yeah, doing good. I'm excited to chat today. So you guys, I want to hear your story. How did you get into the space? How did you meet each other? Give us your startup story of your fund and Converge Capital Partners.
Sure. So way back when I've always been an entrepreneur my whole life. I ended up getting married in 2010, and we had a door-to-door sales company, and my business partner's father had invested money into us. He was entitled. His underwriter had invested a bunch of money into him. Long story short, in 1 year's time, 2011, the president at the time came out and said, hey, no more refinancing to figure out what's going on in the housing market. And as a result of which, his title company ended up filing bankruptcy. So we kept working, everything was fine for about 2 months until we got a call from an attorney from the underwriter. Long story short, the money that had been invested were actually funds from the underwriter, and the company was tanked. So I went home to
were they requesting the money back or trying to get it back? Is that
he filed bankruptcy on it? Yeah. So
yeah, gotcha.
But it's all seized money. So I went back home to my wife. Right, we've been married for just about 1 year, almost to the date. And she says, "Well, you're home early. What's going on?" And I said, "Oh well, we lost the company today. It's kind of the life of an entrepreneur, right?"
Wow.
And she just struggled with it. And so, after a couple of days, couple of weeks, she said, "Look, I just can't handle this. You got to go and be an employee somewhere. I need more security in my life." Which for most of us entrepreneurs, right? Like that is a complete death sentence, right? And I remember waking up through the next 6 years, waking up in the middle of the night thinking, man, I hate this. I feel like my soul is just dying on the crowd. And so I would hop around about every year. I would go to a job, and then I would feel like a claustrophobic, and I'd get out of the job. And the last job that I worked at was down in Lehigh, and that's where I met Eric. And through that time, I'd always talked about, getting into real estate, getting into investments, figuring out how to help people get funded, building a fund, stuff like that, making sure that other people didn't have the same problems that I'd gone through. And so,
what year is that when you guys met?
2016.
Yeah. 16. Okay.
So I was finishing up school and started working at a startup in Lehigh, and conveniently Chase was one of the first people that I met there, and we hit it off very well. So from there, after working together, both being on the sales side of the company, really working together extremely well and producing some good, results. We talked about it, at some point, how we'd love to do our own thing, right? And so I, at that point, got an opportunity to go work at a satellite office for Qualtrics down in Dallas. And we've kind of thought that maybe that was a little bit, less likely to happen given my move and everything, but we kept in touch very, very frequently, and eventually actually started our first business together with me leaving Qualtrics and commuting to and from Texas back up to Utah every week. And, as we built up our initial company, things started just to pivot slightly, and eventually we got into
So what was that first company? What were you guys doing?
So it was two side carting companies. The first was we partnered with an attorney to actually do legal intervention credit repair. So we worked with a lot of solar companies and loan officers and realtors to help their clients qualify for, whatever it is that they were selling. But as a byproduct of it, about a third of those individuals needed capital to start up a business. And so we actually started brokering, startup capital from whether it was institutional sources or private sources. We started brokering that just to kind of, take advantage or to ensure that those people that had their improved credit got intelligent capital, then go get some, payday loan that was 200% interest or something like that.
Gotcha. So you were generating the leads and then, you were brokering them to other places for that side of things?
We did our own leads for both companies. And
for both,
conveniently, they fed each other quite a bit.
Gotcha.
So
okay. Makes sense.
My background, that was super important to help people get the right type of funding and make sure that they weren't in a spot where, in a year's time, their company could be lost like that, right?
Yeah. So as we kept those companies growing, we hit a point where we essentially kind of leaned things out a little bit. And at that point, I was introduced to a general contractor down in southern Utah. Really, really good guy. And he had several single family builds that he wanted to do down in the Washington County area. And this was kind of different from anything that we'd done. We'd done a couple real estate things where we just kind of sent them out to other people. But at the time we had a consultant that was, working with us on some stuff. And it was there that he said, hey, this is actually a really good opportunity to have a very solid project with a general contractor that has a lot of experience, but just has kind of these unique projects that they're looking for financing on. And essentially he kind of planted the idea of what if we raised funds for these projects instead of, throwing it to whether it be an institution or other private lender. And that was really what started Converge, was that first wave of single family homes that we did down in southern Utah. And so, for us, the initial raise was very, very project focused. Right. And then, as soon as that first wave of houses was finished, we just immediately cycled it into another round with, a friend of this general contractors. And so it's just,
And these were all construction homes. Is that right? Your
construction.
Your construction. So, and your role was, and did he come to you and approach you? Like, I need help on this, or did you approach him? Like, how'd that conversation go? And they were looking for partners and money, or?
Yeah. So we had with the two companies that we had built, we had a pretty large just network of affiliates. Mm-hmm. And so this was simply from an affiliate of ours, who was part of a company that did something similar to us up in Salt Lake. And they just, simply made the introduction, just said, hey, I'd like to introduce you to this guy. They have some cool projects that they're looking for financing on. Mm-hmm. And so it really just, honestly, he came to us looking for some sort of financing. And this was just a unique situation where it was very opportune to raise some funds.
And where were you getting the funds from? Just private investors, or were you using your own strategies to get credit and to get lending from other places? What were you guys doing?
Previously, we were doing a sort of underwriting consultation and then, basically matching up business owners with whatever capital made the most sense.
Yeah.
But as far as our actual fund, we got that from private investor.
Gotcha. So for the construction in Washington, Utah, though, that was from private investors.
From private investors.
Yeah. Okay. That makes sense.
That was what flipped us over to the capital raise, approach instead of brokering things out.
So at that point, so you guys had syndicated some money together for those deals, and did it like a light bulb go off? Like, we got to do this? Is that what kind of turned you guys into this world, or what?
Well, one of the things that's really good about Eric, and I think that anybody who runs a fund has to have kind of two different sides of the table. One of the best things about Eric is that he's super good at analyzing things and looking at the numbers and saying, hey, does this make sense, doesn't it? And so when we started looking at the numbers of, hey, if we can get this guy funded, what does that mean for him? What does that mean for us? Is it a win-win? We only ever wanted to do deals that was, going to benefit everybody at the table. And we looked at the numbers and it just made total sense. So we went out and started looking at that. There's an age-old adage that says, your net worth is your net worth. So we went and hit our net worth and just said, hey, we've got this deal. It's pretty unique. And it's a great situation to be in, and found a guy that was able to come to the table with those funds and get it done.
Mm-hmm. Awesome. Okay. So you did those first couple of deals. Then what? What happened next?
After that, to be honest, I mean, it was pretty straightforward from there. Our main goal with that initial round was just to build up track record, to ensure that for, a larger raise and to start doing more projects, we wanted to make sure that we had hard numbers behind what we were doing. And so with that, we simply rolled in to purchase several lots in a different neighborhood down in the same county. And then, got investment capital from a few new investors who were already familiar with the real estate space. So they could see the track record we had built, and, it made sense to them. And so from there, I mean, still always wanting to build a solid track record, we've really stayed pretty specific with what our investments are, and that is that single family build space.
We definitely don't want to be jack of all trades, right? What we found is that investors who look at that and say, oh, you guys are doing too many different things. So we try to stay in our lane.
So so you just stuck to single family home construction. Is that right? And still this day, is that what you guys are doing, or what are you guys doing now? So what happened? Yeah.
Well, as luck would have it, of course, right? We've had more investors come to us since then and say, hey, I know you guys are killing it in single family homes. I'd like my money managed differently. If you guys have looked at this or looked at that. And so we are branching out a little bit, but it's for specific investors because we've been asked to.
Yeah.
Gotcha.
So at this point, it's a little bit different where instead of, like for this second round of houses where we pooled together investor capital from a couple investors, this is a situation where we have a much, a much more liquid investor who is interested in doing a much larger project together. And so a little bit different structure, but I mean, as far as us really, getting, building momentum with the fund, we've tried to make sure that our projects are always kind of speaking the correct language for our investors. And so with a couple of conversations that we're having right now, it just simply makes sense. Where working with them on different things is just, it will wind up boding well for everyone. And what we currently have been doing translates well enough into, slightly different variations in the real estate space.
Gotcha. Okay. Are most of these construction people approaching you? Are they coming to you, hey, we're in a bind, we need some quick cash? Or are you partnered up with a few constructors, like they're the go-to financing, you do a lot of projects with the same companies? Or is it more of special circumstances they come to you, or you come to them and say, hey, we'll bail you out of a bad deal or other financing options? Or is it totally different? Am I off?
No, you're good. You're good. That's a good question. So we primarily work with two general contractors. We have a couple other ones that we have, good relationships with, but haven't done any work with them. And as far as the Southern Utah space goes, it's the market is very hot right now. And so they actually are able to, after the first couple of houses that we did with our primary general contractor, essentially he just said, look, there are so many, whether it's, like an infill lot where it's just like an available lot within an established neighborhood to build homes, or whether there are plots of land that can be developed into, lots and sold to other builders or turned into complete neighborhoods. The two contractors we primarily work with are very flexible as far as capital we have in projects that can be done with those funds. And so essentially, as far as deal flow or project flow is concerned, it's kind of a nice situation where we could raise, triple what we anticipated, or we could, wind up only having half of what we committed raised. And our general contractor we work with, we can figure something out to make sure that all of those funds are utilized, but we're also not, we're not inappropriately using those funds. So we can be pretty flexible with that, if that makes sense.
Gotcha. Okay, cool. Well, that's awesome. Congrats, you guys. That's huge. And today, as of today, I think it's August 2020. Is that still, you guys are primarily in Southern Utah? Is that most of your portfolios there? Or have you guys since branched out and done other things? Or is this kind of where we're at today?
We've branched up into the Utah Salt Lake County area for our first project. And we may be shifting more into this Salt Lake, Utah County area, just because of the pandemic that we're currently in. We do feel like if there were to be any softening of the real estate market, there's a chance that a lot of vacation homes or second homes down in southern Utah would go up for sale, kind of flooding the market with properties that we'd be building and selling. And so as of right now, the whole southern Utah area is super, super hot market wise, but in just to make sure that investor capital is placed as strategically as possible, we are going to be moving things up more into this, kind of northern Utah area.
The other thing that we found is that investors oftentimes are more likely to invest in something that they can go and touch, that they know is very close to them. If the investor's got to drive, from here to southern Utah, it's a 4-hour, 5-hour drive. They're more likely to invest something here where, on an afternoon they've got free, they can go look at the project and make sure things are going well. It just seems more tangible for them, more real. And so they're more likely to invest into that.
Gotcha. And sorry, I just want to understand your guys' model, if you're okay with that. Do you guys syndicate money for deals, or do you have a full fund, like a Reg D 506 type of fund? How's your current structure internally?
So it's a Reg D, just captive fund. And I mean, everything that we're doing currently is pretty simple. Our attorney that we work with, he's thankfully kept everything pretty simple, but it's primarily been a captive fund with just one special purpose vehicle that we've done for a specific project. But
okay, interesting.
Everything on it's been pretty simple. We just operate on a carried interest split. And so no pref, no management fee or anything like that. And again, with us primarily in this first year looking to build that track record, it's worked out very well for us. And so
awesome.
It is incredible how the contractors and other people that are needing money will talk, right? It's much better to have a contractor go to another contractor and say, hey, I'm in this situation. What did you do? Or have you ever been in this situation? How'd you handle it? And for them to refer us than it is for us to go out there and start. So I would say for the other listeners out there, if they're looking to grow theirs, first things first, focus on the track record, because the reputation will come from that.
Yeah, let's talk about that for a minute. So let's talk about raising money, investors, track record, all that kind of stuff. So how did you guys go out and find and pitch your first investors to put money into deals? How did that look? And do you guys both go on pitches? Is one of you more like I pitch and they do the internal stuff? How do you guys work together as well?
Well, thankfully, Eric and I work super well as a team. I mean, outside of work, we're still best friends, things like that. So we're pretty good about bouncing off of each other. So we typically go on those meetings just because we both bring different, strengths to those meetings. So we typically go on those together. As far as how did we find the capital, things like that. Again, it was all about the network that we went to, and going there, and it was actually something that you taught us a lot of, right? From our initial conversations, we just started taking the project to people that we knew. We'd buy them lunch and say, hey, there's this. We know that you dabble in real estate. We know that you're looking for some other, to diversify your portfolio. Here's a really cool project. You might want to take a look at that.
But to dive into a little bit more, just to give a little more insight on that, as far as first investment was concerned, it was a private investor that had reviewed other projects that we've been doing. But these were equity plays. And so with this project strictly being, debt with a pretty fast, return on investment, our payouts are project based right now, right? As soon as the house is completed and sold, then, payments given to the investor. And so with this, we simply had spoken with this investor on several other projects and just noticed that equity, deals weren't of as much interest to them, but getting some sort of return on the capital that they had, come into possession with was their top priority. And so for this, it was simply just, look, here's the cost breakdown. Here's, this particular general contractor's track record. This is the anticipated return that you'll be getting. And, here are kind of the mile markers to ensure that this project will be completed on time. And then as far as the Southern Utah market's concerned, we did, quite a bit of research with a couple of people that we have, a couple of contacts that we have down there. And so the first project was really just something where numbers wise, it made absolute sense. Mm-hmm. And then from that first investor, we started to dive more into individuals that had generated a lot of liquidity from the real estate space. And so at that point, it was much easier to say, here's our track record, but it wasn't, someone who may not have understood, not that it's rocket science, but we wanted to make sure that we were speaking with people from there saying, hey, we've done our first round of houses, here's the next round. And they understood the space.
I think the other really important thing on it was that there was no question that he asked that we didn't know the answer to. We've really done our homework. Number one. Number two, we'd been in constant contact with this individual for a long, long time. And because we were always talking about, what was going on in their life, what was going on in our life, opportunities that had come, they had known that we didn't just take every opportunity that came at us, right? We weren't always trying to chase multiple rabbits. So when we came to him with an opportunity, he knew that the opportunity was real. I think that a lot of times people get into trouble because they take every single thing that comes to them, and they end up missing out on the best opportunities. They try to take so many that they can't just focus on the best. And so we make sure to do a really good job of, again, going back to Eric, does this make sense to do this? Is this something we really want to do? Is this something we're even passionate? Answers came back with no, we would let those opportunities go. Yeah. And because he saw that, when we came to him with a real opportunity, he was quicker to invest.
I love that. I think it's very interesting. A lot of, like myself included, there's that one founding investor that gives you confidence and gives you like, yes, I can do this, right? Like, and then we have the money to do it, right? And that one first yes cascades into a lot of yeses in the future, and I don't know, it gave me confidence, and yeah, I can actually do this. I can raise money. People will say yes, and sometimes getting to that first yes investor, maybe it's 8 pitches, maybe it's 10, maybe it's 15 pitches, right? Maybe it's just one. I was thankful. I think it was my second or third pitch. I got a yes. And I was like, okay, like we got something here, right? And it was a small yes, but it was still a yes, and it cascaded into a lot. Something I love about you guys as well is you guys have just done this, just kind of scrappy, just kind of figured it out. And I know we've talked before and stuff, but you guys have done a lot of this on your own, and I love you guys don't charge management. I preach that like all day. Don't charge management fees. Just treat your investors right, especially at the beginning. Treat them right, get them good returns, and that'll cascade into a lot of good returns in the future for yourself and for your investors. You talked about cultivating that relationship with that one investor? And has that one person been your main investor, or now how many investors do you guys branched out to? Do you have a bigger pool? What does that look like, and what's the plans for the future?
Currently we've got about 5 investors now. Just simply expanding to more builds. But I mean, we still work with that initial investor. And I mean, kind of like you were saying, the hardest thing you'll do is get that first investor. But honestly, expanding out, our second, third investors were people that were familiar with the real estate space, and the next 2 were actually contacts of theirs. So, I mean, that's kind of how it started to grow a little bit. And it really is just, maybe partially it validates them putting their capital into these specific projects to have, friends come in and do the same. But I mean, it's been pretty simple as of right now. And then, we do also have 2 more liquid investors that we're exploring larger projects with. So still just doing, still kind of doing what we know we can just plug and play with and cycle capital through builds. But, while that's working pretty smoothly, we're going into a couple bigger things.
But going back to your point, as far as not charging management fee, I think it's brilliant. I think that because we don't charge management fee, it feels more like we're all on the same team instead of, hey, we're going to utilize your money, we're going to give you a smaller return than we could, and we're going to take whatever it is. But I feel like it's much more of a team mentality. The conversations that we have with the investors, it feels more like family, it feels more like one solid team. And therefore, they're trying to help us grow just as much as we're trying to grow. And that's why they brought these other individuals to the table, these other contacts. So we love that type of structure. And
to be honest, I mean, ultimately there is a factor of trust with whether it's your first investor or even, multiple investors in. There's a factor of trust. And so, Chase being very complimentary to me, I have to say Chase is also extremely good at just establishing trust and really showing that he cares about every single person that he's in contact with. Everybody hates me, but everybody loves Chase. So there you go.
That's awesome. Back to the point you made earlier, I think somebody taught, I can't remember how, there was a mentor or somebody that spoke. I just heard this guy. I think I heard him speak. I'm trying to remember, but I remember the point he made. It stuck with me forever. He says, don't underestimate the value of your reputation. There's a lot of people in the business world that will, screw that partner or clients or whatever. And I'm just going to move on. I'll just, there's so many people in the world. It doesn't even matter. And he said, that is a dangerous mentality to have, because your reputation will follow you wherever you go. Even when you think you've moved across the country, your reputation will follow you. The business world it's a small world, and people talk. And I think that's a lot to be said about, you mentioned trust. I actually want to ask you that in a second. How do you get investors to trust you? But to get partners, to get people around you that trust you, and your reputation to build it over time, and to be a trustworthy person. And I think that starts right with your first investors and doing them well, and doing your second group of them, and third and fourth group. And that's how big firms grow. So Chase, go ahead.
One of the things that I want to talk about with that is, going back to my story with the very first company, one of the things that investor taught me, and it was we had it in print, just about everywhere in the office, was the phrase, first do what's right, then do good business. And that gentleman taught me so much about that any company that I worked for back in the day, and even now, with the companies that we have, that's always been something that we've talked about. First do what's right, then do good business. And so it's interesting how what could be seen as a failure of the first company, right, has really kind of morphed into helping to springboard this company. So for the other listeners out there who are just feeling like they're slogging through, and they're continuing to hit wall after wall after wall, the walls mean something later on, right? And so take the lessons that you can from the bruises and the knee scrapes, but you got to keep moving forward.
To kind of, I don't mean to assumptively answer a question you haven't asked yet, but I'm just so smart that I figure I can do that. So
yeah, Aaron, let's hear it. Yeah, oh yeah.
Anyway,
but the question, yeah.
So what you were going to say is, how do you establish that trust with investors?
Yeah.
So one book that we absolutely love and believe in strongly is called Let's Get Real or Let's Not Play. I don't know if you've read it, but has some extremely good, very actionable content regarding when you are looking into a higher involvement, call it a sale, because you really are kind of selling. In our case, it was our first project. You're really selling that. One of the biggest things is, if you come across any metaphorical yellow lights, there are two things you can do. One is speed up. The other one is slow down and stop. And that book really teaches that if you do come across any yellow lights, make sure that you are slowing down. Make sure you're not, putting some deadline and trying to pressure some investor to wire capital over, when maybe not every duck seems like it's in a row. I mean, as an example, with this initial investor, he was taking funds from a different place where he had him held, and then rolled them into our captive fund. And so through that whole process, we made sure that this was all about the investor on, hey, does this amount work for you? Are you covered as far as taxes, as far as everything goes? We want to make sure that this is as smart for you as possible. And it was never hey, we've got to get these funds in. Can you wire them over today or tomorrow? Like, hey, any update on all of this? It was very much more focused on them and saying, is this the smartest thing that you can be doing with these funds? Are you in a position where that's okay? And also just making sure, hey, what metrics are most important to you? Making sure that they feel very heard, instead of just, having been monologued to for a few minutes and then, saying, hey, so will you invest? If that makes sense.
I love that. I've actually read, I love to study sales and marketing. I just think it's fun to study. And a lot of sales books will mention different types of customers, right? Some of those tactics, urgency, scarcity, they work, and they actually work on all levels, but there's different tactics for, a smaller investment, maybe $200 or $100 something versus, $500,000 type of purchase. And you have to market or sell completely different to someone in that realm. And I think you hit it right in the head of being more of a consultant, being more of is this a right fit for you? Is this a good thing? You see most sales calls I get on now, people are trying to sell me on high ticket softwares, high ticket something to use my company. Most of those sales pitches are, hey, I just want to make sure this is a good fit for you. I'm going to serve as a business consultant for you. I'm going to try to help just see if this is good. If our software isn't a good fit, we're not trying to take any money from anybody. And that works on me. I'm like, okay, yeah, let's sit down and I think it works on other people as well. And there's a lot of mental triggers you can use, but I think directly to your point, I think being a consultant figure, and not every investor is going to fit your fund perfectly. And sometimes you're going to have to, I've actually turned away investors because they weren't a good fit for my fund. I just said, hey, I just don't think this is going to be a good fit for your portfolio where you're at right now in life. This is not a right fit. You need to do something a little more simple, a little more basic than my fund. And I've actually turned away investors. And I don't know. I think if you think about as a consultant that way, it helps. I think take a little weight off your shoulders too. It's like you're not pitching, you're not selling. You're just a consultant. You're there helping. What's in the best interest for them. And right to your point, Eric, I think that's spot on.
I think one of the best spaces that goes with what you're saying, I think what we're feeling also, is people love to buy, they hate to be sold. And when we go to our investors, we talk about a buying opportunity. We don't talk about, hey, how can we sell you on this?
It's a good way to put it.
That's spot on. I love that. Eric, Chase, yeah, this has been awesome so far. I want to hear, now each one of you, I know you've had an entrepreneurial journey and a lot of different things, and we got 2 people on today. So I usually ask people this, but I want to hear from both of you. And whoever wants to go first can go first. But what is something inside, an advice you would give to listeners looking to get in this world, looking to start a business, whether it's a fund or not? What entrepreneurial advice would you give to your earlier self or someone on this show listening and wanting to start a business? Maybe Eric, we'll start with you.
Go at the exact same time, and I'm just
yeah. There you go.
First thing that comes to mind, I'll try to not make this just a random monologue, but the first thing that comes to mind is when I left Qualtrics and posted on my LinkedIn, hey, Eric is now a co-founder of this, new business. I got so many messages on LinkedIn where people were saying, hey, congratulations. And the overwhelming message that I got from everyone was, hey, congratulations. I wish I could do something like that. And, so my wife and I did, we very much planned out strategically how we were going to shift from, having a stable salary, moving into starting our own business up together, Chase and myself. And it's very important to make sure that you do have a game plan for that. But I think, there is inevitably going to be a sort of leap of faith factor in hopping out and doing your own thing. But what I will say is the amount of, when you make that leap of faith, it's just amazing how your own creative mind and, network that you have, it's just amazing how things will fall into place. And so what I'd probably say is a lot of people are afraid to make that leap, quitting their job and starting up something. But aside from really, really having a good plan with it, it's just amazing how once you make that leap, it really opens your mind. And Chase's story is kind of a good example. The way he even called me when he was still, right before he left the company that we met at, he would call me up every so often and be like, man, he's like, my soul just hurts almost, because it's one of those things where instead of, hey, how can I be of the most benefit to people, or how can I, help our investors, get even better returns or whatever it is, it's more just, hey, I am very confined to whatever, small portion of this company that I'm supposed to be a part of. And so I think I would just say, if you are on the edge of exploring something entrepreneurial, it is the most, it's the most self-progressing thing you can ever do. And it's just so cool to really learn more about yourself than, the business world. You really learn more about yourself by doing that, making that transition than anything.
I think that's spot on. The growth curve of being an entrepreneur is so huge and it's fun. And it's yes, a lot of people, I can't believe entrepreneurs work like 60 hours a week, whatever. It's not because sometimes they have to, but a lot of times they want to. Like, it's that much fun. Like, it just something inside of you just sparks this. I love that. The other thing, I had a great entrepreneur tell me one time, he said, everyone says, you step in entrepreneurship, it's like jumping out of an airplane. You got to build a parachute before you hit the ground or something, right? He goes, the funny thing is about that though, the ground really never comes. it doesn't come, and it doesn't come as fast as you think. And if it does come, like worst case scenario, you just go get a job, right? It's especially in America with so many safety nets for entrepreneurs, it's very asymmetrical risk to do that. I think that's spot on, Eric. Chase, I want to hear yours.
Yeah, well, let me first piggyback off what Eric was saying. One of the things that took me 6 years to be able to jump back into this space was that my wife put a lot of conditions, right? One of her biggest conditions was I need to make sure that we can pay the mortgage. And so I had to get very, very creative on how I was going to be able to do that. That I could make a promise to the people that I love and to my kids and say, look, regardless of what happens, right? The necessities of life, the mortgage, the food, stuff like that is going to be taken care of. And this is my game plan, how that's going to happen. And so what we did is we actually sold our home and we actually bought another house and we rented out the basement. And by doing that, it made it so that our mortgage was only $300 a month. So once my wife could see that I could go and flip burgers, right, and pay the mortgage and get the food on the table, all of a sudden her security was met, and she knew that regardless, I could come home and make sure that everything was done. And at that point, in 2016, that's finally when she said, "Okay, go and be in that." And the fact that she's hated waking up at 2, 3 a.m. because I felt like I couldn't breathe, right? So finally.
I rent out my basement right now, by the way, and it's awesome. I pay like $300 a month on my mortgage. Yeah, it's great.
And it takes away all the risk, it takes away all the fear and things like that. And it makes total sense. So sometimes you just got to get creative in order to make it so that you can take that leap of faith logically, right? So many people talk about fake it till you make it, things like that. You don't have to do that. Just do it smart, and it should come. My advice to myself would have been, so many people think that they work hard and they compare that to a 9 to 5. 9 to 5 is not working hard, right? Ask Eric. I mean, there's times where we're up until 2, 3 in the morning. There's some times where we literally do 24-hour shifts between the two of us, where we are working all the way through the day. He'll wake up early. I'll go to bed late, but we basically are 2 shifts in the night and just working on projects, getting things done. If you're like me, where I know that I have gaps with my personality. I know that I have gaps with my talents and abilities. Find somebody like Eric who is. It's very, very tough. It took me 6 years to find him, right? But it was totally worth it. So if you're feeling like, hey, I really want to do this, but I just feel like I'm missing some things, or I really don't want to take that journey by myself, go out there and start networking, finding the people that are going to help fill those gaps, and then walk before you run. As far as the business relationship goes, that would be my. If I could go back and talk to myself 10 years ago, that would be what I would say.
For the record, I'm very grateful to have found Chase as a business partner as well. He's just so complimentary. I have to send some back to him because he's the best. But
yeah, I can tell that you guys work well together. That's awesome. Chase, I love that. And go ahead.
I was going to say, we typically joke when people ask how we met, because we do operate pretty complimentary. We always use the Tinder joke on how we met and everything. And our wives, of course, love that. But anyway, no, thankfully we operate pretty well, but no, it's strictly professional.
That's great. Chase and Eric, thank you guys so much for coming on today. I love hearing about your story. We'll probably need to do a follow-up interview, I'm guessing maybe 6 months, a year from now. I know you guys are growing and doing lots of stuff. So is there a good way for people to connect with you or to learn more about you guys, what you guys are doing?
So you can go on our fund's website. It's Converge CP for Capital Partners. So convergecp.com. You can contact us there. I've got my email on there. That's probably going to be the best way, to be honest. We're pretty affiliate based, so our internet presence isn't very large. And I mean, that's, for us, that keeps things nice and simple. But I would just say go on our website. You can see my Eric at Converge CP email from there. And, we'd be happy to, if we can, whether it's hear people's story and throw some advice out or, anything, we're happy to speak with whoever.
Great. Okay. Yeah. We'll put that in the show notes below too, in the description, so people can click on the link. Okay. Eric, Chase, thank you guys so much for coming on today.
Thanks so much, Bridger. We're so appreciative of you, and we're grateful to be on.